Hey guys, hope you guys are having a blast today. This week keeps intensifying in proportion to a big surge. Though we didn't have a crazy ton of news today, we do have some updates and little developments to go over, and most importantly, we have to talk about tomorrow in the technical portion of the video as well as the conclusion at the very end. Before I released yesterday's video, news came out that SEC chairman said that banning payment for order flow is definitely something that is on the table, and that the SEC is considering halting this controversial practice. I want to give my two thoughts on this. I bet most of you heard of it already, so I will cover this subject really quick today. We also some news regarding inflation again, with even the motley fool putting two and two together to come up with the exact same message I have been preaching on this channel for so long. I took a look through Fintel today, and it's definitely clear that something is looming in the future, so get ready to get jacked when we cover this. Before we get started, let me quickly disclose and state that I am not a financial analyst or advisor, and that all contents discussed in this video are provided as opinions. All efforts are placed to better understand the nature of the current market in anticipation of the greatest squeeze in financial history. Everything presented is evidence I collect, and all opinions are based on research, experience and knowledge on the matter. Shout out to all my Patreons and one-time donors, who continue to support this channel. With all that said, let's get right into the good stuff. First, let us talk about the comments made by SEC Chairman Gary Gensler. We have gone over a lot of stuff, a lot of theories in regards to how hedge funds have been able to orchestrate manipulation so easily. One of the main points we have gotten to is at payment for order flow, which allows brokers to send trade orders to market makers such as Citadel or Virtue, which then in turn execute these trades in return for a portion of the profits. Gensler said what we have been screeching for months, that the practice has an inherent conflict of interests, and that they also get to look at the data first, having informational advantage by seeing and matching off buyers and sellers out of the order flow. This is something we literally talked about a couple days ago when we went over that great piece by 3 college professors who looked into shorting practices on Wall Street. They discovered all the way back in 2010 that informational advantage was a growing tumor in the markets, with institutions have access to data way before it came out. This is why, at that moment, institutions such as banks and hedge funds were placing huge short positions on stocks before they released catalysts or before something substantial happened. Market makers get to see what others are doing, what they are trading, and they get to match what they want on and off the order flow, which is how they send most sell orders to lit markets while getting most buy order flow into dark pools so they can defeat the momentum. They defeat momentum by placing orders in a bucket and then process such orders as one, defeating most of the bullish force that would elevate the prices. This is why on regular days outside of surges we see order flows for buyers be 3 times bigger, sometimes over 10 times, and we see neutral or even downward price action. Gary stated that this may not be the most efficient markets for the years ahead. The SEC is currently reviewing the practice, and it is very possible that they could come out with proposals in the coming months. As the published article by Barron's says, Gensler has indeed mentioned several times that countries such as the United Kingdom, Australia and Canada have already forbidden payment for order flow. Gary stated that he has raised such statements because it's on the table. Furthermore, Gary said, and I quote, "Also on the table is how do we move more of this market to transparency. Transparency benefits competition and efficiency of markets. Transparency benefits investors." Gary stated payment for order flow is a larger issue with market structure, noting that about half of trading is done in dark pools or is internalized by companies that keep those trades off exchanges, something that I still can't figure out how it's allowed. Talk about legalized fraud and corruption. Gary then brought something pretty interesting. He mentioned trades on lit exchanges can sometimes even be opaque. Opaque markets where investors have their trade orders processed differently have a very serious potential for abuse. Gary states, and I quote, "It provides an opportunity for the market maker to make more, and for ultimately the investing public to get a little less when they sell, or have to pay more when they buy. I think it also affects companies raising money, because it could be a barrier to fair, orderly and efficient markets. It is so important for us retail investors to hype this up, because payment for order flow is such a significant factor in how we are being abused and frauded upon. For consideration, note that 80% of the revenue generated by Robinhood comes directly from payment for order flow. The SEC has a long road ahead to gaining our trust, to gaining anything, to be honest, since I have absolutely nothing but disgust for this agency. But, if Gary is indeed looking into this, and is serious about possibly banning this ridiculous practice like the rest of the world has, then I will cheer this as one of the biggest wins, not for the squeeze, but for the average common folk. I have no trust in you, Gary, but I am cheering for you in that you make this happen, so get to work. Big news came out today that consumer inflation expectations over the next 12 months rose from 6.6% to 6.8%. Another small development for the larger problem that is this ridiculous economy we have. Not too long ago we also talked about how South Korea is also now starting to really struggle with inflation as well. It's the entire world economy at this point. Funny enough, today the infamous Motley Fool published an article titled, "Why Rising Inflation is the Great News for AMC Entertainment Stock." It's not like we haven't talked to death how meme stocks are trading under separate forces that make it immune to overall market conditions for the most part, and that they trade low at the moment, relatively speaking, because of the vast amount of short positions. Once market crashes, if that is the catalyst that happens first, we ought to see margin calls for shorts drive the stocks up to a squeeze. It seems that the Motley Fool, who had a very out of touch and bearish segment, is still wakening to the undeniable fact that inflation is indeed a serious problem for hedge funds and all other shorters. What a joke these people are, like how do they still have a job? I protect my financial future against all bad market conditions and very likely market crash with meme stocks. Now, last thing I want to quickly go over is rather some very cool and bullish datasets. Remember that there is a transition going on with an AMC midcap index. GameStop is also experiencing an inclusion to the MSCI mid-cap. I decided to take a look through Fintel to see what is going on, and boy, I have never seen so much green in my life. Starting with GameStop, a lot of new positions have been set by institutions. As you can see on the very top, Vanguard's been adding a ton of positions for the indexes. We also see some other indexes adding shares and positions, as well as other small institutions adding to their ETF funds. Keep in mind that this is just one screenshot, and that if you scroll down there are plenty more buy orders. Switching to look at the AMC data, once again we see Vanguard adding tons and tons of shares and positions. This is most likely due to the inclusion of different indexes for both stocks, but I am super bullish about it. Last thing I wanted to share comes directly from AMC. On their last quarterly earnings report and conference call, AMC announced they had grown their investor connect to somewhere near 300,000 AMC shareholders. Today, AMC sent an email disclosing that the number of AMC shareholders that had joined the AMC Investor Connect has grown past 300,000. This is a great set of events, and I am glad more and more people are joining the program. This is a serious source of revenue for the company which will help it long term. Now, let's talk about today. The Fed reported that reverse repo operations for today resulted in over $1.140 trillion, finally setting a new all-time high record once again for reverse repo operations. AMC's dark pool transactions accounted for 67% of the total volume, while GameStop dark pool transactions accounted for 49% of the total volume today. According to Fidelity data, sell order flow for AMC was bigger than the buy order flow, with GameStop's sell order flow also being bigger than the buy order flow. Now, let us finish up with a recap of today's performance. AMC had a fantastic run for the day, gaining over 8%. It started trading with a slight bump up on the pre-market. The stock traded sideways for the most part until the market opened. AMC then had a significant surge up to 46.25. What was even more impressive was the fact that the stock was above to maintain consolidation on a small retracement so high. The stock then broke out the resistance and once again started consolidating high, eventually retracing to test support at the VWAP. AMC then surged once again, reaching $47 before a massive short attack. What was even more incredible was the bounce up made it reach 47.15. AMC closed at 47.13, well above the VWAP. As for what I expect tomorrow, it's either a huge breakout or more consolidation. Look at the chart and you will see AMC is literally about to test 47.61, its closest and biggest resistance wall. If it breaks it, there is a chance AMC could run to $57 to $60 tomorrow easily. This would put us in a tremendous position to retest the all-time high of the stock. If we don't break the resistance wall, we will dip to 45 or 43.17. Where we will consolidate and start moving up once again to retest that resistance at 47.61. It's that easy, people. As for GameStop, it also had a great performance today, gaining over 4%. The stock opened to a bullish performance, reaching and testing the upper bands of VWAP. The stock would briefly consolidate before breaking the resistance walls as it kept climbing in the early hours of the market. GME then had a bit of a substantial fall, falling below the VWAP. However, GameStop would eventually come back swinging and reaching 222.30. That is when the stock started experiencing a retracement and small attacks that didn't allow it to continue moving upwards. GameStop would then experience a short ladder attack towards the end of the day. However, GameStop came back surging with big momentum on the last couple of minutes before the market closed, finishing at 218.24, above the VWAP. As for what I expect tomorrow, I expect GameStop to keep on running upwards. Look at the stock, take notice of that huge vertical climb it recently had. The stock has progressively moved upwards to retest that 227 resistance wall, which upon breaking it, the stock will most certainly move back to 240 again. Once there, the stock is likely to consolidate a little bit, and depending on how soon it gains strength, it will start pushing upwards again to 260. I am super bullish right now about GameStop. If we fail to break that resistance wall, we could fall and dip to support at 212 and then at 200 if the other one doesn't hold. Stay bullish, set expectations low and those hopes sky high. It's clear this week is going to be big and very important overall. We have already elevated the floor, and right now we are due for a massive breakout. I want to remind you guys that this is not the squeeze, but do allow yourselves to enjoy the process. Those long months of boring and dipping are now being paid back with these brief moments of cathartic enthusiasm. I want to thank you guys for being so mature about the process, and for sticking with each other for so long. I do not know when the day will come, but one day you will be properly compensated for your patience and will to fight Wall Street. For now, we only have these small moments to rejoice, so do make the most of them. Thank you for sticking with this channel. I know it may not produce all the content you want to hear, but I think we have a bit of a good thing going. You guys mean so much to me, and in the end it will be the small moments of interaction we have that will be looked back. I love you all, strangers and degenerates. Stay strong, keep holding, add as you see fit, and always keep expectations low in the gutters with your mind up in the skies. Let me know if you liked the video. Today's big question is, what is your worst habit, and what is keeping you away from dropping it? I look forward to reading your responses in the comments. Thank you for the recent support you have given me with the morning videos. If you want to help this channel, I have provided links which will be in the description for donations or even a monthly pledge of whatever amount you want. These donations do go a long way in helping me be able to pump videos out, as I am now doing this full time with you guys. Remember to follow me on Twitter if you haven't already, and I hope to see you guys on the next one tomorrow. Enjoy the rest of your day and to the moon.